I'm Dan Fitzpatrick at stockmarketmentor.com, and it's Thursday, July 14th. Okay, it's a pretty short video here because it didn't take much more. CME Group. You can see here the stock is right up at resistance where it's hit several times. It's just starting, looks like it's just starting to break through. If we just kind of look at the pattern here, see lower lows and then higher lows. This is, I'm sure this is some kind of magical pattern. We could even call it a head and shoulder continuation pattern, waiting for a move higher, right? Well, let's check out the weekly chart. Okay, you can see what a powerful pattern this is. This stock has been trading sideways for more than a year. This is what's known as a high base. Now, if the stock rolls over, and starts drifting down like this, then this is not a high base. It's a top. But right now, this doesn't look like a top. It looks like a stock that's breaking out. So I want to get back to the daily chart and take a better look here. So the company reports earnings on the 28th. That's 2 weeks from today. It's plenty of time for this to move higher. What I would suggest doing is, if you're long this stock, the reason that you want to be long is because you think it's going to move higher, into earnings. If you don't think it's going to move higher into earnings, then you don't want to be long the stock. So stay long the stock and keep a trend line, like just keep essentially just like a trend line like that. Maybe you make 2, 3, 4, 5% on this trade prior to earnings, because again, this is a big, key, profound breakout. So you want to be there. Now, I'm talking about the period of time between now and earnings. Again, breakout from a multi-month, like basically a year and a half consolidation. I think this next move is going to be higher. But there's one thing, and this is important. Patterns are great, but they can always be trumped by fundamentals, which is like earnings. So this can be an awesome pattern, but if the company reports earnings that are disappointing, boom, this goes down like that. So you need to decide before you make this trade, are you trading the pre-earnings run, in which case you need to hop on board now, or are you trading the fundamentals, meaning that the earnings report is going to be good and the stock is going to break out of this and continue to move higher? If you're doing that, then you might also be long right now. Take a small position, but only a small position. Again, if you're trading the pre-earnings run, get in, get long, ride this thing up. But if you're looking more of a long term, this pattern means something to you, then take a small amount of stock with the plan of holding it through earnings. You're planning on riding this stock through earnings. If it happens to fall back, you know what? Guess where it's falling? It's falling right back into congestion. Your downside is limited to about 10%. There's absolutely no way CME is going to fall back below 90. So your worst case scenario on part of your position is a pullback into the trading range. Your best case scenario is stock moves higher, you're long, you can continue to get long as the stock moves higher, hence turning a fairly small profitable position into a much larger and more profitable position. Okay, that's it for this free video. Members, over to the strategy session.